we got a 5 megawatt site in South Texas that we're racking machines tomorrow. It's finally I got my own.
Oh, so nice. Like, you guys are racking your own A6. Very nice.
Yeah, we did the M63 pluses or whatever, hydros. We got the first double stacked Giga containers.
Okay.
So I'm like,
love the Giga guys.
Yeah. Oh yeah, I do too. They're great. I was talking about it yesterday. We had, or I guess 2 days ago, we had Phil Stanley on, and he was like their original, I guess, kind of money guy, or part of the initial dudes that put some money into it. And he's like telling a story about, you know, how he met them or where he saw them. And I was like, what, Phil, like, this way you're telling this, it just sounds like you're on the prowl for like 2 18-year-old boys, dude. How did you like decide you were going to go track these guys down? But no, they're great though. We make fun of them on here all the time about being 15 years old, but
they've crushed it.
Oh, they've crushed it.
They just figured out a way to address the market and went with it.
Yeah.
Right? And people trust it. Like old guys like that, older guys like that, they're like, they don't want to put in the energy and the time, but they have money.
Yeah.
And they're like, these guys are onto something. Let me invest in
it. Right. And that's what I like about the whole industry is you got a bunch of people who get an opportunity to go chase something down. Because like, you know how it is, like oil and gas and all that, it's kind of established. Well, it is established. And if you want to kind of make something, it's really hard to go just start up an oil and gas company and like turn it into some, you know, company like Giga has done. But this is still so early on that you can have like real entrepreneurs that come up and create something new and actually to watch it grow into something like it is super cool.
And if you're young, like, what else are you going to do?
Mm-hmm. Yeah, what else are you going to do?
Like, you're either, you know, fucking around on Twitter or playing video games, or you could work hard and make money.
Right.
And
so I try to tell my son that nowadays, as much as it sucks, because like, and I sound like a boomer, but I'm like, oh, the kids this and the kids that. And
it happens every generation.
Right.
Everyone's like, this generation, they're weak.
You guys are weak. You suck.
This,
that. But like at the same time, the young ones that do get out and go do stuff and get like I don't think they have so much more opportunity, because I do think a lot of that generation is so kind of stuck to games. And man, some of the stuff, like, I don't know, my daughter and son have told me all these terms are like the whole incel thing and all this kind of stuff. I'm like, man, if you just work hard right now and you can learn how to communicate with people and like get after it, you got so much opportunity to go so much further than your peers.
If you do have people like they were talking about, like these kids who are stuck online, if you have the confidence and the energy, like you'll crush it.
Yeah.
I went to business school at Columbia, and like it's a lot more for networking. If you want to put in the time to learn and learn from professors who are excellent, like class professors, it's really good for that.
Yeah.
But there's multiple reasons to go. Yes, academics, career switching, networking, and then sample approval.
Yeah.
A phenomenal experience. So like, I'm not necessarily bashing it, but you could learn a lot of the stuff that you learn in business school on your own, online, on YouTube, and you're saving yourself $200,000. But one of the things that really stuck with me was I like had this professor, it was an entrepreneur professor.
Yeah.
And he was like, there's 2 ways to make fuck you money, right? And it's not like at a corporate job. Yeah. It's not being a consultant or in tech or a banker. Yeah. Like, it's either you are an entrepreneur or you're an investor.
Yeah.
Right? Those are the only 2 ways to really make fuck you money. So you pick either you are building something or you back the people who are building something. Yeah. That's the best way.
I like that. And I think that's probably true too.
Probably what Phil did with the guys at Giga.
Mm-hmm.
You know?
Right. And I mean, I think if you are good at recognizing patterns, you could go either route. But that's probably the key to me is like, can you recognize patterns, which Michael Saylor, obviously, that we were just talking about him, but that's what I look at him and I'm like, man, that's just a dude who understands like patterns. Obviously he's got the financial understanding and genius to go with it, but like understanding a pattern and like what is going to lead to the next thing happening, because you can see it. I talked about it yesterday when we were doing all these shows too, and I saw a clip of him talking about Apple stock back in like 2012, and just his analysis of it. It's so simple to understand, But it is really just recognizing like patterns and what to look for. And he's just, I don't know, man. He's like making a bunch of people rich right now.
So many people, including me and you. I love that guy.
Yeah, well, and it's weird because it's like the first time, and I'm sure that I got a good friend of mine who is my financial advisor, and this has always been a point of like where we diverge, right? And he's very conservative, and like when I was working in oil and gas, he's like, well, you don't want all your value tied into oil and gas because you work in it, so don't be investing in it. And he's trying to use that same like analogy with me when it comes to Bitcoin, and I'm like, it's not the same, dude. And he's like, well, you said it's commodity. I'm like, it is, but it ain't the same.
It's not the same. It's not the same. He needs to study it.
He does.
You probably subscribe to the Druckenmiller model, Stan Druckenmiller, the investor who, like in the traditional mantra or advice for individuals for investing is like, oh, just put your investments into an index fund and let that passively grow over 7, 8, 10%, whatever it is over the last 30, 40, 50 years. That's a good model for people who don't have time or don't understand.
Right.
That's a really good model. Right. But like if you get it, you should be concentrated.
Right.
That's the best way to make outsized returns.
Right. I agree. Because I look at it, I'm like, I've tried the diversifying things and doing this and throwing it out, and it's like, I don't want, when I can look at the thing that I understand and I believe in completely, and like I recognize too, even though you've seen what the MicroStrategy stock has done and what Bitcoin's doing, you still understand how early we are. You know what I mean? And we are, because like the fact that MicroStrategy is literally probably, I mean, I know there's some others that are starting to do it, but that's the point, is like you had to have the first one to do it, and we're still really on the first one to do it. There's going to be a lot more. You look at like Dylan Leclerc and like what he's doing over in, I guess, Tokyo. It's remarkable. And it's like, man, that's happening fast, super fast. It's probably only been like, 6 months or so? I don't think it's even been that long that he's been over there at Metaplanet doing what they're doing, but it's remarkable to me. And I think it's the way that everything's going to eventually go that route. Like, why would you not?
It's game theory.
Yeah, it is.
Right?
It
People
is.
are like now seeing the outsized returns of all these companies. They're like, wait a second, if I don't do it, I'm going to get left behind. And then now you get the risk, if you're a publicly traded company, now you're at the risk of mismanaging your company's treasury.
Right. Like, and I saw Michael Saylor's going to talk with Microsoft. It's like, man.
That happens. Keep stacking.
Dude,
keep stacking.
Yes, yeah. And it's the same thing. That's the company version. And I hate saying this because this is one thing I don't like about doing multiple shows in 2 days. I feel like I said the same thing over and over, but
yeah. It's going to be the best with us.
Right. Well, for sure, man. Yeah. I've practiced the last 2 days and now we got the smartest guy. So, but like looking at it from the standpoint of, all right, we have every kind of cycle, you've had a new thing that kind of touches on or is new to the cycle. Like we had institutional capital come in, I think, the last cycle, and from the mining stocks and things like that. You had more money pouring in from an institutional level into the mining arena.
No, definitely.
Now this
big money too.
Right, big money. Yeah.
We should talk about that, by the way, because that's why they're not back. But anyways.
Really? Okay, I do want to hear that. So let's go to that after this.
Yeah, please.
But so there's the companies kind of getting involved and some institutional money coming in. This time you have like MicroStrategy, which is, I think, really opening people's eyes to a lot of different things. Like you're just saying, with the other companies are going to have to make a decision which way to go, and you don't want to be the one that doesn't make the jump. But I think the same thing would happen from government levels. And I think if the U.S., which just a mere fact of having an administration coming in that is proponents of Bitcoin, even if you don't do a Bitcoin strategic reserve, even if that doesn't happen, I think the other governments around the world are going to look at this completely different. Just like the boomers that love Trump so much, they look at Bitcoin completely different now than they did a year ago, just because of what his endorsement or his words about it have been. And man, from the company or from the country level, like sovereign wealth funds, and from just governments wanting to jump in, I don't think we can understand how fast things could move at that point. It would get crazy.
It's going to accelerate really fast. The game theory is playing out. I think countries are already talking about stacking. There's states that are talking, like Pennsylvania recently came out.
Wisconsin.
That's the pension. The pension from Wisconsin. Right. I mean, was it a Texas senator? I don't know if it was a senator or a governor. Came out yesterday and says he wants to start a strategic Bitcoin
the Texas
reserve.
One.
Yeah,
gosh, that's great.
So Texas wants to come in before the government because I mean, Texas is the capital of Bitcoin,
right?
In the United States and possibly globally. So it makes all the sense in the world. And I have like a feeling that if the states start doing it, you know, Trump's a competitive guy.
Right.
He's not going to let Texas
that's true.
outshine America.
Yeah,
you know?
Yeah, that's a good point. I don't think it will. And I think, I don't know, the whole hyper-Bitcoinization could happen so fast, and it's stuff like Parker's talked about, you know, gradually then suddenly, and it's true. It's one that I don't, even the jump after the election where we're at today, like we hit 98,000 and it seems like every day is a new one. And I know we've had these opportunities before, but we've never been in a situation where you had the political headwinds, or the political winds behind you.
Yeah.
We've never had that situation. So this is a whole new ball game in my opinion, but
I doubt, like once we cross that 100K threshold, maybe we'll bounce around it for a little while. There's some technical things at play with like massive sell walls at like 100 and 105. But once those sell walls are kind of moved out,
it's a rocket ship.
And like I don't think we'll ever see sub 100 again.
Really?
Like after we cross like 125, 130, I don't think we see, like, because we've been plagued by this massive volatility over the past three cycles, where you're dropping like up to 80%, you know, in the winter part. But a lot of that is because a lot of retail held on to it.
Yeah.
Right. And individuals were playing with that volatility because you have institutional capital coming in, the endowments, sovereign wealth funds, the corporates, the nations. They're not traders. They're holding, like it's a long-term investment for them. Like the US government isn't trading its gold reserves.
Right, yeah.
And you know, obviously gold doesn't have as much volatility, but it's not about the short-term gains.
Right. Man, that's a good point. I haven't thought about it like that.
Yeah, and like pension funds are managing duration. Like they have to manage individual pensioners or people who have 401ks. They're managing what's called duration effectively. Like if you're starting to invest at 30 and you're going to retire by 65, they have to manage that portfolio so that you have your investments by the time you're 65.
Right.
And they don't do that by trading in and out. That's why they like fixed income, because they can manage it pretty well. It's like, all right, I'm going to invest in like a bond from GM that's giving me 6% a year, and I can manage your asset, your portfolio. By the time you're 65, I know 6% a year, they're going to have this much.
Right.
They're not going to make that by trading in and out. Same thing with Bitcoin. And same thing with other types of assets.
You zoom out, right?
So you're not going to see, like, even if there's some sell pressure, because now all of that money is institutional, they're going to sit on it. So there's not going to be as much of this downside sell pressure.
It's to be seen.
Yeah. But that's like, it's to be seen. Maybe the volatility does come back to the downside, but it's less probable because of who's in it now.
Well, and I've thought before, just from the market level, it's harder and harder. Retail can only move things so much, you know what I mean? Like up, I feel like. Yeah. And when you do, like when you bring in this new money in that's institutional, it's going to get harder for a retail group to move your market cap up. And if you get big enough, when you got a bunch of issues, I can see why it would be harder to move it down. I haven't thought about it like the way you just laid it out, but that makes sense. And that's why we bring smart guys on, man. What is it though? And I guess we should say we're from Cohen Capital Markets, right? Or is that right? Did I say that right?
Yeah, Cohen and Company Capital Markets.
Cohen and Company. Investment bank, kind of boutique firm, but you guys are very, very, very active in the kind of Bitcoin world, and I think you're the bank to deal with, or the investment group to deal with.
One of them, for sure.
Yeah, definitely. I mean, you guys seem to be on every sale that happens. handle stronghold stuff. I mean,
that was a great deal.
Yeah.
We could talk a little bit high level about stronghold. You know, a lot of it's public, but yeah, I think that was a pretty phenomenal trade for the company.
Yeah, it was.
For Bitfarms for a variety of reasons. You know, it's a fantastic asset. Yeah, I think a lot of people were nervous about it because it's coal.
Right.
And what I think people don't know, or maybe, you know, just don't understand, is what they're doing is they're cleaning up the coal waste piles that have been sitting in the backyards of Pennsylvanians for decades.
Yeah.
You know, and these things are emitting greenhouse gases that are far worse than just carbon dioxide. And it's on top of that, like when it rains, the chemicals that are inside of the piles, like they seep into the water. Right. And like there's literal cases of people getting sick from the water in Pennsylvania for decades.
Yeah.
So, okay, what do we do with them? We can't burn them because that's highly toxic. They don't just go away. Like the half-life of these things are hundreds and hundreds of years. So the best way to do it is burn them. Right. And when you burn them, all they emit is CO2 and not the methane, not the sulfur. Right, through this CFB process that's like specific to the stronghold power plants, and when they burn them, they actually like stronghold and you know soon to be Bitfarms, they receive renewable energy credits from the state of Pennsylvania that are categorized as I think it's tier 2 RECs, renewable energy credits, that are literally the same categorization as hydro.
Wow. Are you serious?
Yeah, because they're literally...
That's the stuff people don't know. They just hear coal and they're like, automatically it's bad.
Yeah.
You know?
That's what they hear. They hear coal and it's bad, but it's coal waste and they're cleaning it up. Like they are a net negative greenhouse gas emission business.
Dude, that's awesome. But that also goes back to the whole ESG stuff and people not understanding what all goes into these things. Just because it's coal, it doesn't mean it's bad.
Yeah.
Natural gas used to be the bridge fuel, and it was like that was the transition thing to the future and all this. And I mean, I think with the energy demands that are ramping up, like you're going to hear some of the rhetoric change a little bit to some of these, because a lot of the people that are looking for the energy, HPC stuff, AI stuff, like large scale energy consumers, and all of a sudden they need it. It's going to be like, hey, gas ain't so bad, you know. No, we're using clean coal. We're cleaning up the waste product of coal.
I have an interesting anecdote for you. You know, like everybody who listens to you guys knows, it's like power is the most scarce asset right now.
Right.
It's super hard to find. Data centers, hyperscalers, tech companies, Bitcoin miners, like everybody just needs more power, more compute. And like as AI gets better, it requires more compute, which requires more energy. And like we got gigabytes and terabytes, et cetera, of data that are going to be required. And you have like a lot of these tech companies like Google, Microsoft, Netflix, et cetera, they want to be as green as possible. I was talking to kind of like a state legislator, and they were telling me about how they're getting calls from tech companies that are asking them, hey, like where we need more power.
Yeah.
Where do you have more power? And they're like, well, we're out. Like, you know, this is our pipeline.
Yeah.
You have to get in the queue.
Yeah.
And they're like, well, there's this like, you know, 100 megawatt coal plant that you decommissioned 3 or 4 years ago.
Could we go get it?
Yeah.
Yeah.
And these state like legislators are like, but it's coal.
Yeah.
And these guys are like, we don't care.
Really?
Yeah.
It's inevitable to me.
It's inevitable.
Because it's like, but it also goes back to the, you know, so much of the stuff in the past has been like rhetoric and agenda-based stuff. And it's like, when things hit the fan, it's going to change their tune, because in the day they want to make money and they need the growth, and it's what's available. Yeah. So, and they'll find a way to repackage it and make it sound like it's the greatest thing in the world that they're doing for the environment and all these things. And that's fine.
They'll find a way to market.
They'll find a way to market it. But yeah.
That's why nuclear though is really interesting.
Oh, dude, I saw commercials for like, why nuclear is this good energy?
No way.
Yes, I did.
No,
in
they're
Florida.
going already?
Yes. And this guy's like, oh, it's just water vapor. He's like sitting outside, and it was like, oh my gosh, I can't believe what I just saw. This is wild. But I mean, I'm
pro-nuclear, by the way.
I'm too.
So like my personal portfolio, it is like pretty much 100% energy.
Is it really?
It's like 70% Bitcoin, and like 30% nuclear stocks.
Really?
Yeah.
Okay. After we're over, I want to find out what nuclear stocks I should get in. My best quality is talking to smarter people than me. So, and recognizing they're smarter. Man.
Like these guys, like these entrepreneurs that I talk to, so smart.
Yeah.
Super bright.
Yeah, well, and you got the luxury too of talking to so many different groups, right? And you're seeing the market. You got probably a better pulse on the market than anybody else. Before I go into that, I want to ask you, because like you went to Columbia, you're obviously very smart, dude. Like, what is it that prevents smart financial people from understanding Bitcoin and getting into, like, what is it? Just the brainwash, or like the programming?
I think so. I ask myself that question, and I've actually like.
I would say, what was your journey like?
So I'll give a shout out to my buddy Connor. So my journey in about 2016 is when I started exploring Bitcoin,
right?
And it was through like people. I was working at Guggenheim, which is an investment bank. It's like a boutique investment bank out of business school, and one of my kind of classmates, like people in my class during the program, was like, "Hey, we all got to buy this thing, this Bitcoin thing. It's like gonna blow up." And I was like, "Screw it.
Yeah.
Like I'll just go for it." And I kind of put it away. Didn't really like look into it too much. I followed as lightly and I'd buy a little bit more. And then COVID hit.
Yeah.
And I had this like group of friends who we would like meet up online every week and just like chat, like whatever via FaceTime or whatever. Yeah. And we decided to do like a pitch day where we would each pitch each other.
And your friends are way smarter than my friends.
But it was like silly. Like somebody was like pitching like, a pizza vending machine as a joke. And like somebody else was pitching this other thing. Like why Friends is not a good show. Yeah. Like it was just like silly. But this one of my buddies, Connor, he pitched Bitcoin. He got super into it. Yeah. And I was like, "You're onto something, Connor." I'm like, I actually asked him and I went and checked my bags and it was performing phenomenally. Yeah. And after that, I like really started exploring it. You just have to spend time. Like if you understand financial markets, if you understand how money is made and how they manage the supply of money and interest rates, like if you get that, you get why Bitcoin is the best asset class that was ever engineered.
Yeah, right.
But I just don't there are dozens and thousands of smart people who just don't want to spend the time.
Right.
I know. Or they're just so stubborn. Like Peter Schiff, for example. Yeah. Like that dude, like gold bugs. Yeah. Peter Schiff, gold. Like anybody who gets gold should get Bitcoin. Yeah, right. And should understand that it's a much better asset because of its properties. Yeah. It's divisible. You can carry around ever. I don't know. They just like stubborn or haven't spent the time. Because once you do study it,
it's hard to not see it.
Yeah.
Right?
Yeah.
Like, and I don't even feel like I'm the smartest dude in the world at all by any stretch of the imagination. I'm not even the smartest dude in this room right now. So.
Smartest dude in the world right now is MicroStrategy.
Yes.
It's Michael Saylor.
Michael Saylor. Yeah.
And if you don't listen to what this guy's saying, like.
Yeah, you're going to look back and regret it. And I mean, I've probably been a little irresponsible over the last few days about it. But
same. I was going to say, like, you're economy smart. Like, dude, I'm like all in on MicroStrategy. I've like the double levered. I bought short dated call options with my other, like, I am degenning on MicroStrategy.
Yeah, I am too. I'm like, man, look, you don't get these opportunities all the time. You got to try to take advantage of them. If you have the luxury of having a little bit to throw at it, you better freaking do it. And there's too many times in my life where I've missed the bag. And I mean, there's nothing I regret more than some of the stuff I did with Bitcoin back in the day where I'm like,
but what's the worst?
Oh, well, the worst one was I was in Belize COVID time.
Okay. Belize is great, by the way. Great place to be during COVID.
Oh yeah. That was awesome. But I had a bunch of drinks, and so I'm like, all sauced up a little bit, and Trump comes out and is like, "Hey, the NBA, they shut the NBA down, right?" And that's when I was like, "Oh shit, like this is real." So Bitcoin started tanking. Everything's tanking, and I'm like, I've been drinking for like 3 days, right? I'm like, I know what I'm gonna do. I'm gonna sell my Bitcoin right now. It's going down further, and I'm gonna buy. So I fell asleep, or I sell a bunch of it, and I'm sitting there and I'm watching. I see it hit is like $3,700, and I'm like, it's gonna go to 1,000. So I'm just gonna keep watching, and as soon as it gets to the level where I think the bottom, I'm gonna buy back in. I pass out and wake up in the morning, it's like $7,000 again. I'm like, fuck, dude. So then I'm like, it'll come back down. Like this is a dead cat bounce, you know? And I'm like, no, it's gonna come back. So I wait some more. It ends up going back up to like, I think like 13. I'm like, screw it. So I have to buy, but I'm like, I gave up like half my Bitcoin.
Damn.
Right there. And then there's other times I'm like,
I don't know how you sleep at night.
no, it's terrible. Well, I'll tell you the other one. I bought a Defender. And
I just see the price tag
every day,
on that,
I'm like,
hanging over the car.
well, there's a $200,000 Defender right there.
Yeah.
It don't look like a $200,000 one, but it is. But yeah, I mean, it's
the same thing though. Like everything, every fucking like cocktail I buy,
right.
every piece of clothes. Like when I go on vacation, I'm just like,
this is an $8,000 beer. Yeah,
I'd rather be in a box.
right.
You know,
I know.
just like stack.
Yes, I know, just piling it up, man. I finally got to a spot where, you know, like I've done a lot of deals over the past few years, and I've looked at things very much like oil and gas, where I'm like, I want to get overrides, basically. Like I want to treat this like the old layman would treat, you know, a oil and gas deal. They buy the leases up, and they carve out an override and then sell it off to somebody. Finally, that is starting to happen with different groups where they're like, they understand, like, I don't want cash, I don't want anything. I just want, throw me some hash rate, and we're good. And so more of them.
So you're saying like going to find power,
right?
Selling that
and
power,
bringing a group in,
and just collecting like a whatever, a fee or
get a fee.
Licensing
if you're gonna pay me cash, then I'm gonna go buy Bitcoin. And if what I prefer is
just give me the Bitcoin.
Just give me the Bitcoin. Yeah. Just give me the Bitcoin.
100%. So and you can start borrowing like the lending market. That's something another interesting topic that maybe you should bring someone to talk about. But the lending market for Bitcoin is still very nascent.
Yeah.
And it's gonna start blowing up pretty soon.
So that's kind of my thought too, is like, that's why I try to talk to my financial advisor. I'm like, I want to just have Bitcoin and get to a point, I want enough to where I can start basically borrowing against it when the market is right and you're not kind of putting yourself at risk or your Bitcoin at risk. But like, I want to get to that point with my stack so that, because it opens up so many doors to you, you know? You're not getting taxed on it either. It's like... It's what
people are able to do with other asset classes.
Right.
And I would argue that from the lender standpoint, Bitcoin is one of the least risky assets to lend against if you manage it correctly.
Right.
Like, you wouldn't go lend somebody 80% LTV on their Bitcoin.
Right.
I mean, you would, but like the interest rate would be really high. Yeah. And like you wouldn't want that as a borrower because of the volatility. Right. But I mean, 50%? Maybe you could do 50% LTV. Right. And like if you're a lender, like the cost, like right now, interest rates for Bitcoin backed loans are like 14, 15%.
Yeah. Is that at a 50%
Yeah, like 50 or 60% LTV.
Okay.
Yeah.
Okay.
Honestly, like lenders are making a killing on it.
You're right. Yeah.
And
it's pretty safe.
Yeah, but like there's room for disruption. If there's a bank out there that has low cost capital, like they're paying depositors like 1%, like half a fucking percent. Yeah. You know, you could charge 5-6% on Bitcoin backed loans and like knock all these other lenders that are charging 14% out of the way.
Right.
And it's fine because it's very well risk managed. It's 50% LTV. You cross a certain threshold and you just like sell the Bitcoin.
Right.
And you make your loan back.
That's where like that's going to happen.
It's going to happen.
Yeah, it will. And that's where I'm like, I just need to keep stacking it up because that opens so many doors to you. Like that's how those dudes get more fuck you money.
Yeah,
you know? It's
exactly.
Like, I'm not getting taxed on any of this. I basically use it for whatever I want. Like, I like it. I'll go borrow and buy some more Bitcoin.
Lever up.
That's what I'll do. But yeah, so anyway, so I asked you about that. You have, I don't remember, somebody told me that like you got the award for like best investment banker in Bitcoin or something like that.
Yeah, shout out to Luxor.
Yeah, all right, Luxor.
I love those guys, Ethan, those guys. Yeah, listen, it's a competitive space. Like it wasn't a competitive space. Like when I first got into covering like the blockchain ecosystem from like a work standpoint.
Did you have to sell the bank on it?
Yeah,
you did. Okay.
I did. Not as hard as you would think. So, you know, our firm was founded in 2021 with two bankers, Jerry Sorovic and Dan Nash, who were bankers at Bank of America, Bear Stearns. and Wells Fargo. They were recently at Wells Fargo. They saw a really interesting opportunity to take advantage of the SPAC market, which back then was like booming.
Right.
And they were like, these traditional banks aren't covering this product well. Yeah. And we, they did dozens of deals in the SPAC market. And they're like, we can actually take advantage of this opportunity and build our own business. Yeah. And so they came over to Cohen and Company, who was a pretty prominent SPAC investor. Daniel Cohen, Betsy Cohen they're probably one of the more prominent sponsors in the SPAC world, and have done some really good deals in the space. So they partnered together, and one of the first deals that Dan and Jerry were working on was Cypher Mining.
Oh, okay, right.
When they were at Wells Fargo, working with Bitfury, right. And they came over to Cohen and brought that deal over.
Oh, okay.
Part of the deal over.
Yeah.
And so I got staffed as kind of the lead execution on that deal. And on the back of that, it was very successful. We raised $400 million for Cypher, greenfields.
Was that 21?
I think it was 21.
Or 21,
with GoodWorks Acquisition Company. Yeah. Completely greenfield. Yeah. Like, try going around right now as a Bitcoin miner, as a private Bitcoin miner, and ask for $400 million of cash to go build some infrastructure and buy some ASICs.
Yeah.
Try. It's not happening. Yeah. And that's like one of the things that, people come to me, like random folks, like large companies. Like, I'm working with a very large private miner right now on a capital raise. I've worked with smaller scale miners, and it's dry.
Yeah.
For Bitcoin mining in the private markets, it's dry. So like anybody out there who's a Bitcoin miner and is looking to raise capital, like, I like Bitcoin mining as a business. I do. I think it's really interesting if it's done correctly. If you manage your power right, if you manage like what your capital expenditures should be, like, I don't know. I think it's probably better to go buy S19J Pros. If you have like 3 cent power, go buy S19J Pros, and your ROI is better. Like what Jamie McCavity and what the Cormant guys are doing, that's the right way. You're going to go slower.
I've been saying this, but the ROI is so much better.
So much better.
It's so much better.
And so you're going to buy
even if you have lower runtime, it's still better.
Yes. Yeah. Because you're paying like less than $1 a T. Right? I don't know what are S19s right now.
Yeah,
like less than
super cheap.
Yeah. Or you can go pay $22 for like the
M63 pluses. Yeah, right.
Yeah, right.
And we got them at the bottom of the market. We've been sitting on them for a little while, so I'm very happy about that.
Good. I mean, if you time it right, then like perfect.
It was perfect timing.
Yeah.
I think we got it for like $12, $13 too.
That's pretty good. Pretty good. They're back up to like 20 or something like that.
Yeah.
Yeah, so good. You got 50% discount.
We could go just sell them and buy Bitcoin now.
Seriously. Might not be a bad idea. But it's cool to say you got like a mining situation.
Yeah,
it's kind of cool.
I like it.
Yeah. But anyway, so like I alluded to this earlier. In the last cycle, a lot of institutional capital came in, right? Like you had like BlackRock, and you had like Millennium, and you had like B. Riley, like these large institutions investing heavily into Bitcoin miners, and they all got screwed. They all lost a lot of money.
So this is why you were talking about. This is why the mining stocks haven't moved.
Yeah.
Yeah.
I mean, like, so the mining stocks, they're able to raise capital via ATMs for a variety of reasons. Only the big ones though, and like the main reason is because of the liquidity in the company's stock. So like the large scale miners. I could walk you through this like on the side. Like we have all this data. Like the large scale miners get a premium on the valuation on a hash rate basis.
Yeah.
That's how these things have traded, even though I think a hash rate multiple is kind of silly. We can talk about that also separately. But the large scale miners drive more volume in their name. Just because they're big and people are trading. So like
Clean Spark
takes advantage of this Clean Spark rioting, and they're able to issue a bunch of shares.
Yeah.
Because of the amount of volume that's traded. The small scale miners just have a tough time raising capital.
Right.
And if you're a public company, and you can't raise capital, like try being a private company.
Right.
Like the only reason that people will now invest in miners or they're able to raise money is because of liquidity. Just like these banks help them issue the ATMs, make like a 3% discount, sell it into the market.
Yeah.
That's it.
Yeah.
There's liquidity.
So how do the private miners, how are they going to survive? Just organic growth?
My advice to like the private miners is Like the only way, like it's hard to go like knocking on doors and like cold calling to raise money for Bitcoin mining. There are people that have been able to do it, but like the best way is just having a backer, like someone who trusts you and knows you, and that has obviously capital to go do that. Because it's hard to just call on strangers right now.
Dude, that don't sound like it's changed any since when I started Jay. It's the same kind of deal. You know, you just got to find somebody that's willing to pull the trigger on it. But it's not an easy
it's not
game at all. But that's it. I don't think it's easy for public miners, like you're just kind of laying out. It's just tough. It's a tough business.
Very tough. And as a public company, you also have like you have public company expenses.
Right.
So like now you have an additional, like, you know, I don't know, $3 to $7 million of like additional SG&A just to be a public company.
Well, and the thing too that I always, you know, even I wanted it too back in the day was, oh man, we want to grow this. I want to have all this, you know, 100 megawatts, 200 megawatts, 300 megawatts would be great. We want to go that route. The reality is when you're giving up, when you got to find a backer and they're going to want a big old piece of the pie, right? And at least when we were trying to find money, it was very difficult. It was 2019. It's like, it was hard to find somebody that had the capital to go put together a large scale operation.
Yeah.
Or that they were willing to do it. And I think it's still kind of tough, but like the difference now is that I would rather have like a good backer that doesn't care about trying to get to be this massive company and all that. Don't anybody take salary. Like we're not taking salaries with the stuff we're doing now. It's purely like, this is because we believe in Bitcoin and we want to get our own mine going.
Yeah.
We want it's 5 megawatts, but man, even if we got to 100 megawatts, like what was actually going to end up going to me one day was probably about 5 megawatts, 6 megawatts, you know what I mean? So
yeah.
don't let the ego get in the way of like what your goal is, which is to get as much Bitcoin as possible. And like non-KYC Bitcoin is great. I like it a lot. So
100%.
That's like my whole attitude has changed about like what I want out of things. And it comes with just getting older too, you know?
Yeah.
I'm here because I love my wife, I love my kids, and I want to like enjoy my day.
Yeah.
You know what I mean? And I don't know, it's funny because like I'm sure, how old are you? You're 30,
37.
37.
Yeah.
Okay. You're not that much younger than me. You don't have nearly the gray hair I got, but
it's coming in though, man. After a few years in Bitcoin, you're just like,
you do a few more deals and it's going to start, you're going to start looking like Santa Claus like me. But like nowadays it's like, man, I just want to get as much Bitcoin as possible, live in a place that I don't have to worry about, you know, the stress that comes from like how it felt before with government kind of regulatory headwinds against you all the time. It's exhausting.
Yeah, it's stressful. And like now, you're like sitting there like, why are people trying to take my shit?
Right. Like
it's just my shit. Leave me alone.
Leave me alone and just like let us be. But I don't know. I'm just really excited that I feel like things, every cycle there's going to be something different, but like this is such a different thing than we've ever dealt with for the positive for the first time ever. And it's just really exciting. And so I guess with yourself, I don't know how, I've been on calls obviously with you and you've said a couple things. I'm like, yeah, I'm interested. I didn't think about it that way. One of the ones I heard you talking about was just, it's not always necessarily great for, if you're trying to sell an asset or a company, if Bitcoin price is just ripping while you're going through it, because you can create some FOMO that might get some people interested, but they're also probably, you're still limited in the number of buyers you have, especially depending on the size of your company. But also people don't want to overpay, and we're so used to the 80% drops on Bitcoin price that it might kind of freeze them out for a little bit and make them want to wait and see. Have you seen any change in like your guys' level of inquiries over the last month or so, or has it's changed some?
A little bit, yeah. I mean, but there's a lot of assets on the market right now. We won't say names, but like you have some large scale operations that are out there. You have some smaller guys that are like 20, 30 megawatts. Some deals are getting done. But you have this private to public valuation gap, where in the public markets, you have like the public miners that are trading on a megawatt basis, like $2.5–3 million per megawatt.
What?
As a public company. Like if you take the enterprise value.
Is this just rack to the rack or including machines?
It just including machines, everything, right? The enterprise value, like the entire operation of these public miners. I don't have it off the top of my head, but it's somewhere, take the total market cap plus any sort of like debt or liabilities on top of that. You divide that by the number of megawatts that are fully energized. That's like your EV to megawatt, enterprise value to megawatt multiple. It's like $2 to $2.5 million.
Okay.
That's what it would take per megawatt to buy that company, right? It might be more, it might be less depending on the company. In the private markets, the deals are getting done at like 250 to 500 to 600,000 per megawatt.
Yeah.
So like if you're a private miner and you're sitting on 50 megawatts and you go to Marathon, you're like, and Marathon wants to acquire your land because they're acquisitive and your infrastructure, they're going to offer you like 400 to 500 a megawatt because those are like the precedent transactions. That's like where the market is. And then you as a private miner, you're like, wait a second, that's offensive. Right. You trade at $2.5 million a megawatt.
You want to give me 500.
What gives? But the reality is that the public miners, they kind of enjoy this premium for a variety of reasons. They're kind of massively scaled. There's like volume, there's liquidity. So like the markets are rewarding them in order for the markets to trade and arbitrage, right? There's a little bit more of a financial thing. If they wanted, and then they are also, the public miners have to consider what it takes to build. So like I'm gonna ask you, like, what's like your cost to build per megawatt? Like roughly, and I guess to the rack, you're probably 250, 275, somewhere in there. So like you think Marathon or CleanSpark is much different?
No,
right?
Not
so
really.
Why would they pay $2.5 million a megawatt, where like 10 times more than what they could build? Right, it just doesn't make sense.
Man, I didn't think about it like that, but yeah.
That's the kind of, it's this buy versus build.
Right.
That their analysis that they're doing.
Yeah.
We put out a newsletter every week. I don't know if are you on it?
I know. I need to get on it.
I'll get you on it, and it shows these types of metrics.
Yeah.
Right. Like it's a pretty standard thing for investment banks to send out to their clients. It's like, what is your multiples? What's like the what's the recent trading price? How much capital was raised? Whatever, all different types of operating and financial metrics. We keep track of each company's hash rate. We keep track of how much they've mined in Bitcoin.
Dude, I need to get on this. How do I not get on this?
Only the public guys, right? So we put that all together. Yeah, we'll get you on it. Anyways, what I'll do is I'll send it to you, and you can just subscribe to it. All right. And you'll be getting it on a weekly basis.
Yeah.
I think it ultimately has to happen because you don't need, in the public markets, right? You don't need 45 publicly traded Bitcoin miners.
Right.
You just don't. Yeah. Because like as an investor, like these big institutional investors, they'll pick like the top 4 or 5, maybe 8 winners.
Yeah.
And they're like, all right, well, what's the difference between, Marathon and, some small miner? There was a difference.
They're bigger.
Yeah. That's it. Meaning there's more liquidity.
Yeah.
So like as an investor, you rather go hold the stock that's more liquid because you can actually sell into the market.
Right.
Without moving it too much.
Okay. Yeah.
And so ultimately the smaller scale miners will capitulate, I think.
Because they have to.
They have to. And then they're just gonna be incurring costs. Their valuations will be dropped out. They'll be left stranded, orphaned stocks.
Do you think that this price run that we're seeing now and that I think is going to continue on is going to push more activity, or do you think it's going to kind of push the big players? Because there's literally, at least when I think about it, and you actually talked about this too on one of the calls, 4 or 5 like real players. You know what I mean? And once you hit a certain level, who's going to buy you? There's Marathon, Riot, CleanSpark, Bitfarms, and there's probably Phoenix. There's some other guys in there, but there's not a lot. And so it's like, all right, is this going to be? Do I need? I guess speed to market might give you a reason to go buy, a private guy. But I talked to the Bitfarms CEO a couple days ago.
Nice, Ben.
Yeah,
great guy.
Yeah, super good guy. Really sharp. And he's like, man, we got like 450 megawatts, 500 megawatts in the U.S. that we need to develop. Like we're not going to be buying.
You don't need buy. Yeah, especially not at a premium.
Right. Especially right now. So it's kind of like what you were saying then in regards to the other stuff.
I think it's a private, maybe what they should, because like, yeah, if you have 100 megawatts, now you're a small guy.
Yeah.
In the public market.
Right.
In the public
crazy?
market.
Yeah.
It is. It's nuts. But that's not to say that your infrastructure isn't valuable. It's just to say that you shouldn't be a public company.
Right.
So like maybe you privatize, maybe there's like a management buyout, you take it private or like a take private deal, and then you just mine Bitcoin, right? And then you don't have to worry about the public company expenses, and you don't have to worry about quarterly filings, and you don't have to worry about earnings.
I never want to be at a public company, man.
Yeah.
All right, one more thing.
Doesn't sound great.
What about companies going public right now? Is there an appetite for that?
Yeah, huge appetite. We should definitely. That's a whole topic.
That's a whole nother one?
Yeah.
Okay, we're going to have you on again.
Yeah, I'm not going to, like, I dressed up like this because I'm going to the conference.
Yeah.
But I'll bring my Satoshi shirt.
Okay, all right. Let's have you to Houston. Come in the studio.
Yeah, that'd be awesome. I'd love to.
Yeah, well, let's do
I
that.
love Houston.